PM's Q1 earnings blowout. This stock is smoking hot. Booyah, investors. Are you ready to talk about a company that's absolutely lighting up the market? I'm talking about Philip Morris International, ticker symbol PM. This isn't just some old-school tobacco play, folks. Oh no! This is a company in transformation, a company that's delivering knockout punches quarter after quarter. And let me tell you, their Q1 2025 results? They weren't just good, they were spectacular. We're seeing a behemoth pivot, adapt, and conquer. And if you're not paying attention, you're missing out on some serious potential green. So buckle up, because we're diving deep into a stock that's got Wall Street buzzing, and for all the right reasons, baby. This is a story of innovation, smart moves, and big numbers. Let's get right into the juicy details, the numbers that make the bears cry. For the first quarter of 2025, Philip Morris reported net revenues of a staggering $9.3 billion. $9.3 billion. That's not just a number, that's a statement. And get this, it represents a 5.8% increase year over year. In this economy, with all the headwinds, seeing that kind of growth is like finding a diamond in a coal mine. It tells you this company knows how to make money, how to grow its top line, and how to deliver. They are firing on all cylinders, folks, proving that even in a challenging industry, excellence shines through. This isn't luck, this is strategy, execution, and pure, unadulterated business savvy at its finest. But hold on to your hats, because the revenue is just the appetizer. The main course is the earnings per share, the EPS. Adjusted EPS came in at a phenomenal $1.69. That's up a massive 12.7% year over year. Can you believe that? 12.7%! And if you strip out those pesky currency fluctuations, looking at it in constant currency, the adjusted EPS grew by an even more incredible 17.3%. That's the kind of growth that makes fund managers drool. It absolutely smashed the consensus forecasts, which were hovering around $1.61 on sales of $9.1 billion. PM didn't just beat expectations, they blew them out of the water. This is what champions do. And how did they achieve this masterpiece of financial performance? Volume, baby, volume. Total shipment volumes increased by a healthy 3.9%. Now you might think tobacco, growing volumes? Yes. But the real story is that growth is coming from. While combustible product volumes, the traditional cigarettes, actually saw a slight uptick of 1.1%, showing incredible brand loyalty and pricing power. The big story is the smoke-free categories. Price increases, particularly in those combustibles, also played a huge role in juicing up that revenue figure. This company is playing chess while others are playing checkers. They know how to work every angle for maximum profit. The smoke-free Tsunami, IQOS, and Zyn are money machines. Now let's talk about the revolution, the transformation, the future. Philip Morris isn't just sitting back, counting on Marlboros forever. No way. They are leading the charge into smoke-free products, and it's a tidal wave of innovation. I'm talking about IQOS, their heated tobacco sensation, and Zyn, the oral nicotine pouch powerhouse they snagged with the brilliant Swedish Match acquisition. These aren't just alternatives, these are game changers, folks. This strategic pivot is monumental, showing a company with foresight, courage, and an insatiable appetite for growth. They see where the world is going, and they're getting there first, planting their flag for decades of dominance in a new era. This is bold, this is visionary, the numbers don't lie, and the numbers for smoke-free are explosive. In Q1 2025, heated tobacco volumes, led by the unstoppable IQOS, surged by an incredible 11.9%. 11.9%. And hold on to your seats, because oral products, with Zyn leading the pack, skyrocketed by a mind-blowing 27.2%. 27.2%. This is where the hypergrowth is, people. Smoke-free products are becoming a bigger and bigger piece of the pie, already accounting for 38% of net revenues back in Q3 2024, and they were gunning for nearly $15 billion in smoke-free revenue in 2024 alone. This isn't a side hustle, this is the core of their future growth engine, and that Swedish Match acquisition, pure genius. Bringing Zyn under the Philip Morris umbrella was a masterstroke. This product is on fire, especially in the US market, and PM is leveraging its global distribution network to take it worldwide. Imagine the potential. We're seeing a company not just adapting to change but actively shaping the future of nicotine consumption. They are building a portfolio of reduced-risk products that consumers are clamoring for. This isn't just about satisfying existing customers, it's about attracting new ones and offering better alternatives. This strategic foresight is what separates the winners from the also-rans, and PM is a winner. But don't think they've forgotten about their traditional business. Oh no, that combustible segment is still a cash-generating machine, a veritable ATM. Thanks to incredible brand loyalty, especially for a flagship like Marlboro and savvy pricing strategies, they can implement price increases that stick. This demonstrates the inelastic demand for their products, allowing them to offset declining smoking rates and fund their smoke-free future. It's a beautiful strategy. Use the profits from the old world to build a kingdom in the new world. Plus, they're not slacking on efficiency. Cost-saving measures are in full swing to keep those margins looking mighty fine. Smart, smart, smart. Dividend deluge PM showers investors with cash, ka-ching. Alright, income investors, lean in close because this is where it gets really exciting for you. Philip Morris International isn't just a growth story, it's a dividend dynamo. This company has a long, proud history of rewarding its shareholders, of sharing the wealth, and boy do they deliver on that promise. We're talking about a high-yield stock that can be a cornerstone of any income-focused portfolio. In a world of paltry interest rates, PM stands out like a beacon, consistently pumping out those sweet, sweet dividend checks. If you like getting paid to own a stock, then Philip Morris should be right at the top of your watch list. K-Ching, let's talk specifics, shall we? As of early 2025, PM was dishing out a quarterly dividend of $1.27 per share. $1.27. Multiply that by 4, and you're looking at a very handsome annual payout. And this isn't some stagnant dividend, folks. Philip Morris has a track record, a beautiful long history of its dividends. They understand that shareholders love a raise, and they've been more than happy to oblige over the years. This commitment to growing the dividend shows confidence in their business, in their future earnings, and in their ability to keep the cash flowing. It's a sign of a healthy, robust company. Now some of you might be thinking, Jim, that sounds great, but is it sustainable? And that's a fair question. But let me tell you, the sustainability of PM's dividend is rock solid, underpinned by their stellar financial performance and that brilliant strategic pivot to smoke-free products we just talked about. The cash flows generated from both their legacy business and the rapidly expanding new categories are more than enough to cover these generous payouts. Even with the challenges in the tobacco industry, PM's strong earnings, smart capital allocation, and growing smoke-free segment provide a powerful foundation for future dividend security and growth. You can sleep well at night owning this dividend machine. It all comes down to their unwavering dividend policy. This isn't a company that's fickle with its payouts. Philip Morris maintains a strong commitment to returning value to its shareholders consistently. This isn't just talk, it's backed by decades of action. They see dividends as a core part of their shareholder value proposition. For investors looking for a reliable income stream from a global powerhouse that's successfully navigating industry shifts, PM is a compelling story. They're not just paying you, they're telling you they believe in their own success, and they want you along for the profitable ride. That's what I call a shareholder-friendly company. Future so bright, PM stock is a rocket ship to riches. So, we've seen the earnings, we've seen the smoke-free explosion, we've seen the dividend deluge. What about the stock itself? How does Wall Street react to all this good news? Well, historically, Philip Morris stock has a pretty good track record around earnings announcements. Over the last 20 earnings calls, stretching back about 5 years, the stock showed positive one-day returns 11 times. That's 55% of the time, folks. And it gets even better. Over the last 3 years, that positive reaction rate climbed to 58%. When PM talks, the market often likes what it hears, sending the stock price north. And what about looking forward? What kind of returns can we expect? Hold on to your hats because the projections are looking mighty fine. Philip Morris is projected to offer an incredible 8.9% return over the next 5 years. 8.9%. And get this, that's noted as the highest among certain analyzed tobacco stocks. This isn't just about a steady dividend, it's about total return potential. With a market cap of around $254 billion, last 12 months revenue of $38 billion, and operating profits of $13 billion, this is a financial juggernaut that's still poised for significant upside. The market is recognizing the power of their transformation. Now let's be real. It's not all sunshine and roses in the tobacco industry. There are challenges. Declining smoking rates globally are a headwind, no doubt about it. Regulatory pressures are always a factor, with increasing taxes and stricter rules on traditional cigarettes. These are legitimate concerns, and any smart investor needs to be aware of them. But what sets Philip Morris apart is how these challenges. They're not burying their heads in the sand. They are meeting these issues head-on with innovation, with their smoke-free strategy, and with a relentless focus on delivering value despite the hurdles. They are turning challenges into opportunities. And yes, currency fluctuations can be a pain in the neck for a global company like PM. They've faced negative impacts from things like a strong Swiss franc or volatile emerging market currencies. For example, an unfavorable currency impact of 40 cents was anticipated for the full year 2024. But again, this is where strong management and a diversified business model shine. While currency can create short-term noise, the underlying strength of their brands, their pricing power, and the unstoppable growth in smoke-free products are the long-term drivers. Philip Morris is a resilient, adaptable giant, and its future looks incredibly bright. This company is a buy in my book. But do your own homework, of course.